Hi, good day to all. This is Kelvin here. Welcome to today's video of Idea of the Day, where I'll be sharing with you all a potential bearish breakdown for WTI crude oil. So before we start, let's take a look at the disclaimer slides first. All right. So even before we jump into the technical configuration of WTI crude, let me share with you a significant observation between the behavior of forward-looking U.S. inflationary expectation that is represented by this orange and blue line over here, dark blue line, which is the 5-year break-even inflation, and 10-year break-even inflation derives from TIPS, which is the Treasury Inflation Protection Securities. So if you look at since May and April 2022, pardon me, both of these break-even inflation rates has started to actually inch much lower. And if you look at their previous correlation, it has a direct correlation with WTI crude oil price as represented by this green line. So all in all, if we start to see further inflationary expectation starts to cool off or cool down and inch lower, it could actually create and lead to a negative feedback loop for WTI crude oil that is in play right now. So with that, let's take a look at the technical configuration of WTI crude. So this is a 4-hour WTI crude chart, which is the cash market. So you could see over here since 7th of March 2022 high, which is at swing high at this 130.60. That is actually kind of a lead on by this aftermath of this Russia and Ukraine invasion. And we start to see that since the high of 14th of June swing high at 2022, which is at 124.15, it started to trade within this minor descending channel. And what we could see over here is the last session early last week, we managed to, I would say last week, managed to shape a bounce at this 93.50 range support level. But however, technical configuration has remained weak on the downside. So we'll be watching a 103.95 as my key medium-term pivotal resistance level. So if you do not see a 4-hour close above this level, potentially WTI crude could actually see a retest at 93.50, and given that it's still evolving within this minor descending channel, there's a high chance that we could actually see a breakdown below 93.50. Also, given that forward-looking U.S. inflationary expectation remains weak, so a breakdown below 93.50 should take us down potentially lower to 85.35/83.60, which is the lower boundary of this descending channel support, and as well as this 0.618 Fibo projection that I'm going to draw right now to show to you all how do I get to confluence this graphical support level at 85.35/83.60, taking from the swing high of 14th of June 2022, project down towards the low that was actually tested on 93.50, and this recent corrective rebound, it gives us exactly at 0.618, which is right at the 83.60 level. But however, if we start to see a 4-hour close above 103.95, then all the bets are off for the bearish scenario to see a potential corrective rebound to actually head up much higher towards the next resistance zone at 115.40/118.20.